Hey everybody, Jeremy here for your weekly update. Last week we talked about the S&P 500 and specifically the futures index consolidating above the 4100 level, being very strong, but a dip down to about 4025 still being viable as long as the retracement developed in an all right fashion and didn't do anything crazy. Right now, if we zoom in here, we have broken the 4100 level. We did have a really nice doji slash hammer candle here, but just could not reclaim that 9 period moving average so far today since the futures have opened. The dip down to the 4025 level that we had talked about before really was based on the weekly chart. So if we come out to the weekly chart, you can see here basically a dip down to that area is still going to remain above our major moving averages, and would just be a larger weekly pullback, but would not be violating that major trend. Nothing much has changed here. I would like to see this shape up and hold probably the low of this candle. So coming down to about 4060, 4060. If it breaks below that, I'm honestly going to be less interested in trying to play the dip on that. And I might do some option plays instead of just going straight directionally. There's still a lot of weird economic stuff going out there. Inflation numbers are still elevated despite what the Fed has been, saying and stuff, and what the market has been calling for. I'm optimistically bullish slightly, but we need to see how this pullback develops. We did kind of have a little double top here that has now broken on the daily chart. So on the daily, there's not a whole lot to see. Ideally, we would hold this diagonal support line, and if we break back out above the high of today's candle, which is about 4085, that would be really constructive to me. Otherwise, I'm going to be waiting for a secondary pattern to develop if we get a deeper dip on the S&P 500. Going out to the Russell, very similar thing for the Russell 2000. Last week we had talked about consolidation above the 1900 level. We still have that. That is still in play. The 20-week or 20 daily SMA here, this moving average in blue, was still coming higher at that point. And now that it has gotten to a higher level, I'm a little less interested in this pullback, even though it hasn't done anything wrong in terms of our horizontal support and resistance lines here. If it still does stabilize above that 1900 level and can reclaim this moving average, and ideally the green 9 exponential moving average as well, I will be interested in that. But as long as it's below these two moving averages, it's a little harder and a little messy to play. And that is reflecting in a lot of the charts that closed last week. On Friday, a lot of good retracement possibilities kind of got blown up because the retracements just went a little bit too far. So we really need to see some constructive price action here. If it does close and get below that 1900 level, then there's probably more downside to come back down until we test into the like 1850 zone. If we put this out to a weekly chart, just so you can see what I'm looking at on the weekly as well, we really want to see this 9 EMA on the weekly chart hold as well, which is just shy of that 1900 level. I was kind of anticipating that it would continue to rise and kind of meet us at this 1900 level, and it's just shy of that right now. So if that does get violated on the weekly chart, we'd probably be coming down again and testing that about 1850 zone, which is confirmed not only on the daily chart moving averages, but also the longer term 50 period weekly moving average. RSI and MACD are both still bullish on this. We do have the higher pivot highs, higher pivot low, higher pivot high. So technically that is a bullish uptrend. But right now we have to exercise caution in the market. There is still a lot of uncertainty out there. So just trading smart in small position sizes is really going to be the name of the game. And going out to the NASDAQ, the NASDAQ hasn't done anything wrong either. We had talked about consolidating and staying above the 1200 level here. Since then, the daily chart, the 20 SMA has actually risen above that. And ideally, I would like to see a bounce on that 20 SMA, which is currently at 12,150 basically. But if we come back down to that 1200 level, it still would be holding the support, horizontal support from previous pivots. So in my mind, that hasn't done anything wrong. We do have the 200 period moving average under us also acting as support. So that's nice. And then out to the weekly chart. This is actually just kind of a fairly standard retracement so far on the weekly chart. And last week or week prior, we'd drawn in the diagonal retracement here that we wanted to see into the 1200, and then the potential bounce that we would like to see. So that's kind of still the pattern that we are looking for. I keep duplicating these instead of removing them. Sorry about that. Clean the chart up slightly. So it hasn't done anything wrong. Would love to see a doji here and for it to stabilize. I'd really love to see this 50 period weekly moving average hold. Honestly, at this point, I don't think it's going to. I think we're going to come down and test that 1200 level. And then from there, kind of see where we go. 1200 is going to be coinciding with the 9 EMA right now in the weekly chart. So that is going to be offering some support. And then finally, if we want to look at the Dow Jones, honestly, right now, the Dow Jones is just kind of in a messy, choppy pattern. I'm not super interested in it until it either clears this chop right there, or if it breaks down right here. So for now, it's just kind of in a sideways channel, signaling neutrality. A lot of money has been trying to cycle out of the Dow Jones and into the other areas of the market on the previous run that we had. And now it'll be really interesting to see what happens in this area of the market now that those other areas are selling off a little bit. So that is the summary of everything that we have going on in terms of the major market indexes. And then just to jump in to some individual charts, just to show real quick the depth or messiness of a lot of these retracements, the back and forth, the big volatility candles here, and then the break on the 9 with the recovery. It's just a little choppy here on Apple. Airbnb, even before earnings announced, they had a pretty significant gap down and then run down, closed below the 20 period moving average and is now consolidating there, likely more downside to follow. Adobe kind of breaking down its little base there that it had around 374, so it needs a little bit of time to clean up. AMAT still looks decent, technically hasn't done anything wrong in terms of horizontal resistance, but it has broken down below its 9 EMA and is fighting to try to hold its 20 SMA. It'll be really important to see this reclaim that 9 period moving average. And if I was going to do some kind of a trade on it, I would look for a break above the diagonal resistance line there. I do really like AMAT long term. It's got great fundamentals. It pays a small dividend of a little over 1%. Has really good cash flow. So if you're into doing options trade, cash flow is really great for it. We do have earnings coming up on the 16th, so just a few days away. So this is a stay away because of earnings until we get past earnings date. So it's going to be next week or the week after this, I guess I should say, before I'm really going to be interested in playing this. So maybe it chops sideways a little bit, or even if it does pull back a little deeper than we would like and find support here, it has a week or so to develop for us before we would have any interest in playing it just because of the earnings date coming up. So, and then of course, Google, major headlines with the AI competition with Google and Microsoft, and Google just got absolutely killed on that news. And that resulted in much deeper pullbacks in tech across the board because most of the tech market follows Google a lot of the time. So anyways, we're just seeing a lot of this kind of deeper retracement that kind of blows up the bullish patterns. If you can see here, I'll clear that drawing set to clean this up. We had a nice daily uptrend, nice diagonal support all the way up until it had broken above its 200 period moving average and cleared all of this horizontal resistance, which is really bullish. And then the news came out and just immediately sold back off. So this is just kind of the reality of the market that we're in right now. It is very volatile. It is very unpredictable and news driven. So again, trade cautiously this upcoming week, small position sizes if you're going to be doing anything. Last but not least, just to look at the Forex calendar really quick. Just to update, we don't really have any important economic data coming out on Monday, but on Tuesday we have the core CPI data that is going to be coming out, and that's going to be really important to the market. Wednesday we have core retail sales that's going to be important to the market, and then Thursday we're going to have core PPI. So that's the producer index coming into the market, and that's also going to be really important along with unemployment claims. So another news heavy week coming in here. It's not all the time that we need to concern ourselves with these kinds of economic reports. It's just when we are in strained economic times where inflation is very important. All of these reports are indicators of inflation. And since we are in a market right now that is very concerned with inflation, we need to, as traders, be a little bit more mindful of what is going on with that. So anyways, I will leave it there to keep it short today, guys, but enjoy your trading week and let me know if you have any questions.